Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast, where every day we try to demystify technology and talk about a topic in a language that everyone can understand. Now, a few years ago, that Stocks app might have been the very first app that you instantly removed from your new shiny iPhone. But things are changing. The whole industry is becoming more welcoming. People are getting more familiar with that kind of world, especially when they're dabbling in crypto. So today, I want to explore the world of stock and options analysis and the role of technology in that. And a company working in the heart of that space is SpotGamma. And essentially, they are a fintech insights company that applies its proprietary methodology towards modelling index and equity options and then provides unique content to its subscribers. So Brent will be joining us, and he's featured in many publications too, such as the Wall Street Journal, Bloomberg Markets, and so much more. But I don't want to reveal anything else, so buckle up and hold on tight, because I'm going to beam your ears all the way to Connecticut, where Brent is waiting to share his story. So a massive warm welcome to the show. Can you tell the listeners a little about who you are, what you do, and maybe share your origin story too, and what put you on this path?
Sure, absolutely. Thanks. Thank you for having me. It's been fun to talk to you today. My name is Brent. I'm founder of SpotGamma. And what SpotGamma does is we analyze the options market to figure out how that could impact or drive stock prices. I've been in the options and equity business as a professional for over 20 years now. And it's the culmination of my experience both on the sell side working at banks as well as the buy side working at a fund that led me to understand that the options market has a massive impact on the way that stocks can move. And I think that for the most part, this was really shown last year during the whole GameStop mania, right? Where everyone could see that big options trades would drive stocks. So what we do at SpotGamma is we write a daily analysis for institutional level and retail traders alike. And it's for anyone that's interested in seeing how the options market can impact, again, the stock market.
And I'm curious, what's the story behind SpotGamma? And can you tell me more about that story and the problems that you set out to solve with technology?
Yes. So what ended up happening is I worked for a few brokers, and then I also worked for an options market maker called Wolverine. And what I could see was that there was such a large, technology drives the equity and options markets now. I mean, technology just the way that people analyze markets, the way that people interact with markets now, it's all driven through technology, right? And a big part of that is understanding how trades work at the exchange level. So it used to be that you would call a broker on the phone, and if you were a large hedge fund or something, and you place an order over the phone, and they would call down a pit, to the floor of the exchange. I mean, if you watch sort of the 1987 Wall Street movie, right, that's kind of how it all worked. And over really from 2000 the year 2000 forward, the electronification of markets really picked up. And where that led to SpotGamma is that the way that exchanges function now, and I think, again, the GameStop saga of 2021 shed light on this, but basically you'd have all these online brokers that allow people very quick and easy access to the markets, and they put in an order, and that order is electronically sent to an exchange, and within milliseconds, a market maker or a broker is analyzing that trade and buying or selling, right? And this is all happening, again, within milliseconds, every single trade. And what that meant is that the decision process of how to hedge that risk is also automated. And it's that understanding that process that kind of gives us an edge here at SpotGamma, because the way that these dealers and brokers are hedging their risk, right? Every time someone puts a trade into Robinhood or every time someone uses their E-Trade or Interactive Brokers or whatever you may use as a brokerage platform, every time that someone trades there, dealers and market makers, again, are on the other side of that trade, and they need to react. And that's all happening electronically and systematically in the flashes of a few seconds. And so now there's APIs and all sorts of other ways to aggregate this data and reveal sort of what is happening under the cover, so to speak, on our website, SpotGamma.com, as well as through different other facets, longer term research reports and things like that.
And there's been a lot of talk about how much the world has changed in the last 2 years. But if we can compare the world, especially the world of Wall Street in that 1987 movie with Michael Douglas, to what it's like now, it's just insane.
Still a good movie.
Yeah. And here in 2022, though, SpotGamma is a highly regarded fintech insights company that's applying its proprietary methodology towards modeling index and equity options, and then provides this unique content to its subscribers. But is there anything you can share with the listeners about the tech that makes all that possible?
Yeah, absolutely. So what's interesting about the options market is that it is the largest data feed, to my knowledge, in the financial markets. And it's because of the fact that for every single stock in the United States, there's about 4,000 different stocks that have options listed. There are tons of different individual contracts tied to each stock. So you have millions and millions of transactions taking place every day in the US options market. And the data feed is just immense. I mean, if you talk about big data, there is nothing larger in the financial markets in terms of that real-time feed. And we call it the Oprah feed, OPRA. And so it's really been, cloud infrastructure and sort of more powerful computing at a much cheaper cost that allows people like us, SpotGamma, to function. I mean, it used to be, obviously, and your listeners understand this, that you'd have to have just immense server power, right? And you'd probably have servers in your building and all these kinds of things. And the storage cost was very expensive. And all that has really come down, and the processing speeds continue to increase. And the data is becoming more readily available to people. We like to say that, the information we're getting now, right, is institutional caliber data that just wasn't available 3, 4, 5 years ago. And so the abundance of technology, the lower cost of technology, and sort of the ability for people to get access to data, right, and parse and consume and model that data, really has opened the door for people like us to function as a business.
And one of the things I always try and do on this podcast is get people thinking about areas that you don't associate with technology and how it's been transformed by it. So on that side of things, why do you think tech, stock and options analysis work so well together?
It's an interesting market now, right? Because you have this idea that technology is actually a deflator, right? And there was the COVID, pandemic stocks that all took off, like Zoom and Peloton, and a lot of these, in-home technology or technologies that allowed people to work from home and sort of just allowed life to sort of continue despite, the pandemic. And that was largely a function of the success of technology and technology stocks was, for a lot of these names, tied to the fact that money was just very cheap and easy, right? Interest rates were very low. The Fed was, accommodating, and it allowed money to be very cheap, and it allowed the way that a lot of technology companies, the way that they operated, to try to grow their way out of basically spending enormous amounts of money. And that was a model that worked for a long time. And what has also been fascinating about that is, over the same period, is that we had the electronification of markets, right? And the ability for individual investors to get very easy open access, via online brokers and trading from your iPhone and things like that. And the fast growing technology stocks were a big recipient of a lot of the money that was coming into the market, right? When you talk about the stimulus checks that we were given here in the United States and things like that. And this also sort of tangentially, I think, is related to, crypto in a large way, because crypto sort of had this acceleration of financialization. What I mean by that is basically, yes, Bitcoin's been around for quite a while, right? But very quickly that ecosystem expanded, and suddenly you had options and derivatives and lending and all of these methods, right, to leverage technology to create this financialization, right, of all these tokens and different things like that. And so you could see that the speed of technology, or sort of the understanding of, okay, we had 50 years of evolution in the US options market and equity markets. And that all sort of came to a head, I think, in the last year, where you saw massive money come in. Most of that is focused on tech stocks, which is highly leverage to growth and things like that. And a lot of that is because of cheap and easy money. And now that a lot of that is coming out, it's something like the internet bubble, right? The bloated things are now sort of being, washed away, right? And I think we're going to be left with with better technology going forward. Certainly crypto, there's a lot of interesting things that are happening, but there's a lot of noise in there, right? And I think the same thing with technology stocks in general, that a lot has improved over the last few years vis-a-vis acceleration and growth in technology, but it all sort of just sped up too fast, if that makes sense.
Yeah, 100% with you on that. And if we go back before crypto or even the GameStop side of things, I think the whole space was a little bit intimidating for the average person, and there was just so much going on and trying to understand it, and it seemed almost that they were locked out of that world. So can you tell me a little bit more about how now you're actually demystifying the options market and empowering investors at all levels? Yeah,
the interesting thing there was that obviously I think it was the iPhone, which was 2007, I believe, which just sort of opened the door for, trading from your mobile phone, right? Because that big screen. And it took a while for commissions to come down. And it's well known now that Robinhood in late 2019 and some other brokers moved to charge basically commission-free trading, right? So that was a big entry point for a lot of people to want to get involved. And then obviously you had, the pandemic, but it's also, I think, so the pandemic left a lot of people at home, and sports were closed, as you know. There was really nothing else to do except for trade. Stock markets were open, equity and options markets were open. And so I think the fact that you had zero commissions, very easy access, right? You could trade from your phone all the time. And then everyone got a stimulus check. So that just brought a lot of people into the market. But then you also had, the social media evolution, which has been very interesting as well, wherein, people could share what they're doing in real time and advertise what they're doing in real time. And it's become a real exercise in, there are basically like online bucket shops or boiler rooms. I don't know if anyone's familiar with that, but, you have these situations, and Wall Street Bets was, the marquee one, where people would get together and sort of pump stocks, right? And now that exists still on TikTok and Instagram and all these other things. So there's another area where technology has really come in and impacted things and sped up cycles, I think, right? Manias occur faster and bubbles maybe occur a little bit faster. And the open access is great for everybody. But I think it, in some cases, people don't necessarily respect, at least in terms of options, the leverage you're getting, right? And with everything, with manias, unfortunately, a lot of people do lose money and have to learn a lesson the painful way, I guess.
Yeah, that's the only way sometimes. And I'm curious, though, do you have any examples or use cases or anything of how you've helped somebody, let's say, like a first-time investor with your technology?
Yeah, absolutely. So we offer on our website an extensive training course. So if you go to academy.spotgamma.com, we have a gentleman named Imran who's from London, actually, and he trains banks. So when first year college students go to a bank and they sit on a derivatives desk, he goes into places like Bank of America and he trains them right from soup to nuts on sort of what is an option, what is a stock, and then takes you all the way to sort of advanced theories and ideas on how options work. And so that's one place, but the other place is that on our site, for people who understand options a little bit better, what we do is we aggregate data in real time, right? And I mentioned that Oprah feed before. That's a huge data feed. We've built a cloud infrastructure that monitors all of that options activity in real time. And if you remember back to the GameStop saga, whenever we're talking about this idea of a gamma squeeze, right? And that became sort of front page news about how these traders would get together on Wall Street Bets or other sites, and they would all go and buy options at the same time, and that would drive a stock higher. So this tool that we built allows people now see that activity come into the market in real time. And that was something that was previously only available to, a sophisticated bank or, like a Citadel, who's a famous market maker here in the United States. They, before this tool was built, that they were the only ones that could really see that flow come into the market in real time, to see those trades come in real time. So it's sort of a democratization of, not only democratization of the data, getting everyone access to that data, but it's also translating that data another step, right? We try to, everything that we do, we consume raw data, which is sort of ubiquitous now, right? Everyone can get access to raw data. There's a lot of people that post raw data for very cheaply, but they don't really tell you or help you translate that data into meaningful, actionable content, right? And that's what we really try to do. Get that raw data and then tell people why this matters and why you should pay attention to it, right? What is the value of what you're consuming?
And obviously, there's so much volatility around at the moment, especially in the stock market and even crypto, everywhere. Everything's all over the place at the moment. So is there any advice that you'd offer to anyone that's just concerned about that risk and volatility in the space?
Yeah, anytime things get quite bloated, and I think, again, this harkens back to the idea that the money was very cheap and free, right, for everybody. And there was a bubble that was blown from the pandemic, right, up until very recently when the Federal Reserve here in the States and I think basically everywhere have started to say, okay, we got to take the punch bowl away, right? We're going to raise interest rates, mainly due to inflation. And so I think until that inflation settles down, there's going to be a headwind for equities and risk assets in general, meaning you sort of have to unwind all of that free money, right, that came to the market. And so I don't think that assets in general, be it, housing or crypto or even equities, will be really safe until inflation comes down and the central banks stop raising interest rates. And the problem ultimately with higher rates is that people don't know how many interest rate hikes there will be right now, right? And the most fundamental way to price any asset is to understand what future cash flows are. So that's how you would price fundamentally equities, or where do you want to buy bonds, right? All financial assets are tied back to interest rates. And if you can't predict what interest rates are going to do, if you don't know the level of interest rates, 3, 6, 9 months from now, it becomes very hard to calculate what the actual value is of anything, right? You don't want to buy a house if you think mortgage rates are going to go higher, for example, or maybe you want to buy a house now because you think mortgage rates are going to go higher. So that uncertainty and the volatility in interest rates is really the main driver for everything that's happening now. And so I think by and large, if you're an investor, you kind of want to watch, right, for when inflation is going to stop rising and starts to turn, and that will indicate maybe that central banks will stop trying to hike interest rates, and that may provide stability for financial assets.
And as we look towards that future, and hopefully it's much, much more positive, are there any tech trends that you're following that particularly excite you at the moment, or what in general excites you about the future?
Yeah, I think that these major sell-offs, right, they open the door for great opportunities. And while core stocks like Apple and Microsoft were quite expensive last year on a whole bunch of fundamental basis, you could say now they're quite a bit cheaper. And anytime you have this type of calamity in markets, things tend to overextend to the downside, right? And that's because oftentimes funds are closed, there are margin calls, there are all sorts of other factors that make people have to sell even high quality stocks like Apple and et cetera, simply as a function of the fact that they need the capital to put elsewhere, right, to sort of stay afloat. And so you can get some great bargains, some great opportunities, I think, when markets really wash out like this. I think that's part of it with crypto too, right? You're seeing funds, blow up. You're seeing, margin calls and stress across the whole area. And that's bringing a deleveraging to that environment. But kind of like the tech bubble and the internet bubble around the 2000s, the names that emerge out of the selling often are the top quality names that you want to own, and you can get them at better prices. So I think that is, that's what excites me about these times. You don't necessarily want to jump in as soon as stuff starts to sell off, but you can leg into positions. You can find things that are much more attractively priced out in time, right? Due to these large sell-offs, where a lot of it again is driven by the fact, positioning facts, right? Not the fact that Apple's not worth this anymore, but maybe a big fund like a Tiger Global got a margin call and they had to sell off their position, and that really pushes values to an extreme in a good way, where you can get bargains.
And although we've pretty much offered an overview for people new to this space, I'm conscious there probably will be some loyal members of your community and subscribers, etc., that might be tuning in just trying to get some information on what's on the horizon. So for those people, I don't know if there's any teasers you can offer about what's next for SpotGamma and where you're planning to go from here.
Yeah, thank you for that opportunity. We're heavily focused on building out tools for increasing the ability for traders to see into different markets. So we're looking at the commodity space, we're looking at the crypto markets, and we're trying to find interesting and unique ways to build some tools to highlight, again, sort of like we do with equity options, to highlight how options flows are impacting those assets, again, commodities and crypto as well as equity. So that's something that we're focused on now. And we think it's a great opportunity to build into these markets, right? Because there's so much volatility, and that oftentimes can bring a lot of interesting opportunity for traders.
Now, we began the podcast talking about your origin story. As we come full circle, I'm going to have a bit of fun with you now. I'm going to ask you, is there a song that's inspired you, or you just gets your head in the zone, or just means something to you that we can add to our Spotify playlist? What would it be and why?
Yeah, there's a classic song that I listen to a lot, and I have a couple of kids, and you watch the news these days, the markets are falling apart, and sometimes you just need to feel good, right, and happy. And so the song that I like is "Lovely Day" by Bill Withers. It's a classic song. It's a great song. It just, kind of puts a smile on your face and calms me down, and makes you feel a little more positive about, the world and, and life and everything else. So that's my Spotify recommendation.
Awesome. I'll add it to our playlist. I must admit, you had me nervous there when you were talking about your kids. I thought, are you going to say Everything Is Awesome, the Lego song?
Oh, no. They're smaller kids, and so I get exposed to a lot of Disney songs, and so the machine that is Disney, and I wouldn't recommend any of those for any adult that doesn't have to be exposed to them.
Well, thank you so much for joining me today. But before I let you go, for anyone listening wanting to just dig a little bit deeper, find out more information about SpotGamma, or even contact your team, what's the best starting point?
Sure. SpotGamma.com. I am at SpotGamma on Twitter. We also have a YouTube channel where we do a lot of videos, and a lot of those videos are, explanatory videos where we explain different concepts and sort of what we're thinking. So I think that's a great resource for anybody that's just curious about some of just general options concepts as opposed to, higher level discussions. It's a great resource.
And that's something I always try and do on this podcast every day, as I said earlier, just try and demystify technology, make it accessible for all. So kudos for doing what you're doing too, and making the world of tech stock and options analysis more approachable for anybody, really. So thank you so much for sharing your story and what you do, and hopefully we can stay in touch and talk again soon. But thanks for joining me today. I
would love to do that. Thank you for the opportunity.
Now, this is not an area that I'm an expert in. I would never leave any advice on anything like that. And I'm curious, though, for anybody listening, whether you're new to stock and options analysis or you're an old hand at this, how have you seen technology change the industry? And what's good, what's bad, what experiences, what insights have you got to share? Please, I implore you, I'd love for you to email me directly, techblogwriter@outlook.com. You can also DM me on or follow me on Twitter, LinkedIn, Instagram, just at Neil C. Hughes. Send me a message. Let me know what you thought of today's episode. And if there's anything you'd like to add, or if you've got a question to ask, let me know. Now, obviously, today was all about stock and options analysis and the role of technology. But what are we going to talk about tomorrow? Well, let's spin the wheel of fortune, and where it stops will determine what topic we discuss tomorrow. And to find out what that is, well, you'll have to join me again bright and early, where I'll be waiting inside your podcast feed with another guest. But before I go, just a big thank you for listening to the podcast, and until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.